Welcome back. Now, South Africa has witnessed a rather dramatic shift in the banking and financial services landscape. The industry is now being transformed by a wave of innovation from digital-only neobanks to cutting-edge payment solutions. The traditional banking model is being challenged from all sides, you see. To look at what's driving these changes, what challenges exist for incumbents, and where the future of finance in South Africa is headed, Denker Capital's Kooyman now joins us. Kokkie, hi, good to chat you once again. I mean, this is big for Pepkor. They've got this massive customer base. They can't really lose here, can they?
Not always that easy, but you're right. It is certainly something that will be good for their client base. It will be good for the consumer in terms of more competition in a space. But I think we must very much bear in mind that both banking and the retail sectors are very, very competitive industries. And they're very tough competitors. They're fighting it out with each other. So to break in from the outside into banking is not going to be easy for Shoprite or for Pep. I had a quick look at Shoprite's last presentation, investor presentation, and it's interesting, of the 58 slides, there were only 2 slides that mentioned financial services, and it was only a third of the slide. So the risk to them is, obviously, this is for them also something they want to start doing more and more, although they've been in this space for quite a while. They've got something that's running. But if you want to take on established players like Absa, like Nedbank, like the First Standard Bank, and then specifically in the area they're focusing on, Capitec, you've got to send in your A team. You know, you've got to really do it big time. But the retailers do have, I think, 3 big advantages. The one is they've got a big retail branch network. I mean, Shoprite, I think, is 2,800 branches. They've got a very large client base, and increasingly they've been giving those clients loyalty cards and all kinds of cards, which has enabled them to gather data. So they've got a lot of data on those clients. And that means when it comes to, let's say, lending transactions, and even if you allow them to do a prepaid electricity card or things like that, you're gaining data on the clients, which reduces your risk of working with that client and of your credit risk. So, and obviously the clients are loyal to the brand, to Shoprite or Pick n Pay or Pep. So it's going to be very interesting. But it's not a slam dunk.
Yeah. If you're looking, though, at, say, Pick n Pay and Time Bank and those kind of relationships, how have they played out? Because these are like the forebears, and we need to know, okay, you've worked, will we work, sort of thing.
Yeah. I had it down as one of my notes. I thought, I should mention, but because it hasn't, the problem is for Pick n Pay is it had a lot of other operational problems. So in the period when they started the JV with Time Bank, I think it attracted a lot of attention. Certainly for Time Bank, it really worked. I mean, Time has grown. It got brand recognition. They were quite innovative in terms of those kiosks, and like within 5 minutes you had a card. And I think Pick n Pay would have benefited from that as well. But again, it's what we said earlier. For your retailer, it's not a panacea. Like the benefit Pick n Pay got from Time didn't spread to the rest of the business. And I'm not sure if it's because they took their eye off the ball. But so for Shoprite, Pep, are they going to focus so much on this that they take their eye off the very important retail ball?
Yeah. You see, that's the whole thing as well. But then, like you said, there's Capitec. Now, Capitec has got this business model going where they've got it just right. You can see what's happened with their results. They grow and grow and grow. Is there enough room in this town for 2 sheriffs? Because Capitec's kind of got this already.
Yeah. Yeah, so we Capitec and actually Pep and Shoprite have the same philosophy. It's very much client service driven. The culture is of client service, and also the culture is of passing on benefits of scale as they grow back to the clients. So those 3 players have mostly done more to fight inflation in South Africa than any government program, simply because they've kept costs low. And so it's going to be a real battle for them to, because Capitec have brought banking costs down a lot. So it's the one thing worrying me a bit, when I thought about the whole topic, is this a sign that of the competitiveness or the low growth of in South Africa? Because if your economy is growing at 4, 5, 6%, and you're opening new stores and you're gaining new clients, then why go into banking? But is this a sign that Shoprite as well? I think total turnover grew only 5.6% last year. That's more or less in line with inflation. So I think it could also be a sign of a low growth environment. I see Shoprite's closing down operations in Ghana, Malawi, Mozambique. Yeah, so Africa is also not that enticing as it seems. So now we go and take Capitec. I'm not sure. Capitec is formidable.
It really is. It really is. But let's fight back, because Pepkor, 80% of prepaid cell phones go to Pepkor. So they've got that client base, like we said at the beginning. So you've got to be able to tap into that client base. It's there. You've got to try.
Yeah, and I think very important in retailing, most of those clients come to a branch or go digitally to order goods, let's say 2-3 times a week. I'm not into retail anymore, so I don't know the exact stats, but let's say 2 to 3 times a week. So they're regularly there, and it's so easy then to say, have you got funeral insurance? Can we offer you a prepaid this or a prepaid that? So you're quite right. It is, you add it to your cart, and while you're shopping, why don't you take this? So I think you're totally right there. That is going to be the big advantage for the retailers, the continued regular sessions or interactions they have with clients.
Yeah. What about the models, the business models that go into this? Time Bank changed things quite a bit. Are they now working on that same business model? What are they looking at?
Yeah. It initially, it seems the easier products, and Pick n Pay there have gone clever and gone JV now with, as they did with Time Bank, so not doing it themselves. Shoprite, Pep want to do it themselves, their own products. So that means, in fact, I think one of them, I think it's Pep are doing, or Shoprite doing insurance product, pet insurance, but using OUTsurance. But from the banking side, I think they're using their own product, designing their own product. So they'll go with the easy products first. Okay. Yeah. But one other thing they must just be careful of, and I'm sure they do that in their calculations. Banking has considerable risks as you grow in terms of cyber attacks. You need quite a sophisticated network to protect your clients. Yeah. Your whole risk of downtime. You're having a bigger operation, your downtime risk becomes more important, because in a store you could still do manual transactions. Online they can't. And then obviously the whole regulatory problem. The bigger you become, the more the Reserve Bank will try and regulate you, want insight into what you're doing, how you're doing it. So it's going to be very interesting. Look, all three retailers have superb management teams. And obviously they've thought a lot about it. They've been watching Capitec, they've been watching the banks, and they must have come to the conclusion, we can also do this for our clients.
Yeah. The Prudential Authority, they've been having a look at these guys. And one thing I'll say about the SA Reserve Bank and the PAs, these guys don't mess around. They make sure all the due diligence is done. How easy is it then to open up a bank? I wouldn't think very easy.
Not easy at all. Having said that, the Reserve Bank has been, for quite a while, it's been one of its missions to increase competition in the financial services industry. So it's in its interest to make sure new players come in, but it must be responsibly so. So one thing, if you run a bank, they vet your CEO, your directors, your management. When a bank changes its CEO or wants to bring aboard a new director, the Reserve Bank gets involved. So they will make sure that the people employed have got the necessary experience. I think Old Mutual went through this as well with Old Mutual Bank, the same with Lusaka and Bank Zero, Time Bank as well. But it is good for South Africa to have more competition, especially in that lower end of the market. And so the Reserve Bank is encouraging that, but it will keep a tight rein on it. We've seen that with DBS many years ago, and now Itala in KwaZulu-Natal, how easy it is, to fall over if you haven't got good management.
And I suppose you also have to watch that initial enthusiasm as well, because you want to promise the world, because you want to get customers to come in. And you need to be careful because it's money you're dealing with and you need to make a profit. You need to get through that first year.
Yep. So totally right. Will also in the client's mind. So how easy is it for a client who's a very happy client at, let's say, one of those three retailers to then switch its financial services custom to a retailer? But that's why I think the way they're doing it is by starting with easy products on the insurance side of funeral insurance. Most people need a funeral insurance, easy money transfers between people in the same organization, well, the same client base. So a ShopRite client to a ShopRite client. So I think they're clever in starting with your lower end easy products. It's later in 10, 15 years time, they want to add, let's say, motor vehicle finance. Don't think they'll go there soon, but, or mortgage then it gets more complicated.
Yeah. You actually hit the nail on the head right there. It's been banking charges. And I think that's one of the things that people don't like is banking charges. Capitec got it right. They've had all sorts of things, even data now. They got cheaper data that you can buy and things like that. You've got to look at those niche markets. Yeah. I mean, we haven't mentioned Revolut, who's coming in on a different scale as well. But again, they started by tackling in a niche market, one of money transfers internationally, where there were wide margins. So I think that is what the retailers are trying to do. Having said that, the margins in banking aren't that wide as they used to be 10, 15 years ago, and thanks to Capitec. So, yes. Yeah, a very interesting discussion. Kokkie, thank you so much. Good to chat to you once again and all the best for 2026. That was Kooyman, a banking analyst at Denker Capital.